Hello, I'm Robin Gibson, and this is the Harvard House Money Morsel. Welcome back. Thank you for joining us. Don't forget to like and subscribe and click the bell so you get a notification of when we're releasing a new video. I'm sitting today again with Michael Porter. Hello, Michael.
Morning, Rob.
So, Michael, we're getting towards the end of the year. It's been a bit of a rocky one for AI, but the AI boom is still there, and we had some results that would be quite informative into that part of the market, didn't we?
Yeah, definitely. Just like the whole of South Africa's hopes rest on the Irish performance, the performance against Ireland
Yeah.
this weekend. Sorry, we're recording this on Friday. You can notice I've got my little rugby ball cufflinks on, Robin.
Fantastic. Yeah.
But yeah, essentially the market's hopes, Robin, were resting on Nvidia's results that were released last week on Wednesday. Nvidia is the most valuable company in the world, and what happens there definitely sets the tone. And I think I suppose the market having been absolutely in love with AI is just starting to question what we've been saying for a while. It's just starting to question how much money is being spent and whether there's a return coming on this money and whether this spending boom is sustainable and all the stuff that we've talked about.
Yes.
Anyway, Nvidia did come out with results. Revenues are let's just ponder the numbers for Robin, because it's quite intuitive.
Breathtaking, isn't it?
Yeah. Revenues in the third quarter of last year were 35 billion for the quarter. Revenues this quarter were 67 billion.
Wow.
I think so. It was 65 billion. Sorry, but yeah, a 65% increase, and relative to the second quarter. So revenues this quarter were $10 billion higher than the previous quarter. Now, if you just think back to our medium-term budget, and SARS has collected 20 billion rand of extra tax this year that they didn't expect.
Yeah.
And Invidia generated 170 billion of extra revenue this quarter relative to last quarter. The numbers are staggering, Robert. But I mean, the market actually liked it. Basically, the comment from the CEO was demand is just outstripping supply. They can't keep up. And Invidia obviously makes all the chips.
Yes.
But if you've had a look inside a data center, or you've seen pictures inside data centers, you'll also know that there's a lot of equipment that's got to connect all these computers together and all these racks together. It's not just you obviously slotting everything in. Yeah. And there's wires. Well, I say there's wires everywhere. It's all very neat and tidy and organized. But Nvidia are now the largest network company in the world, because they're connecting these millions of CPUs together to provide the infrastructure for data centers. Yes. So listen, I think the bottom line for the markets is that generally it was reassuring. And also there was some commentary around the export controls and the politics around the chips in China and things like that. And I think generally it was soothing to the markets, but I'm not sure that the market's still not reappraising, Robin, just where valuations are. Funnily enough, because Nvidia is growing so quickly, the valuation on Nvidia is not crazy. It's only maybe at a 25 or 30 PE off the top of my head. Yes. So it's not actually at 200 or 300 PE like a share like Palantir is or something like that. But nonetheless, if you see a drop in demand or a slowdown in demand, you know where the market's going to react. It's going to be brutal. Yeah. So, but anyway, the results were reassuring. But the whole market's outlook for probably the next couple of weeks hinged on those results, because it's such a bellwether. Yeah.
Michael, it's actually a nice thing to explore a little bit, because this whole AI. We've gone from the global village, and then COVID made everyone retreat into their sort of nationalism. So nationalism is now the kind of big thing, and Trump has really accelerated that. But the chip related to AI, I mean, it's huge. Don't you want to just unpack for our viewers the relationship between Invidia, TSMC, and ASML, and why it's so international, and you almost can't undo the soup from that point of view?
Yeah, I think, Robin, I mean, over 30 years, you've just had supply chains diversifying. I don't know if you remember, so I'm a bit of a James Bond fan. I'd come out, my parents were, and we watched all the James Bond movies when we were kids. Anyway, And I'll take you back a little bit now, but if you watch a film like Moonraker, that was the one where, he wanted to wipe out the whole human race with poison, stuff from space. But the principle of that was the best country around the world is making the different components.
Yeah.
And I think that's exactly where the world's gone, Robin. You have chips designed in America using all that IP,
Yes.
but they're not the best at manufacturing the chips.
Yeah.
Taiwan is much more efficient at manufacturing the chips.
Yeah.
And even a company, so ASML makes the machines.
Yes.
They sell them to TSMC.
Yeah.
They make the chips.
That's Taiwan.
Well, that's designed by Invidia.
Yes.
And then obviously you're selling those chips to, not back to Invidia, but you're selling them to all the data center guys who are building data centers. So Invidia is building data centers, so they
Yes.
would be buying some of their own chips back, but you're selling the chips to whoever, and so even if you look at something like ASML and the machines that they build, something like 20,000 components go into one machine. And the lenses come from this company because they are the best in the world at making absolutely precision lenses or lasers or whatever the case is. And so I think the world has just has over the 50 years basically sought out the best suppliers and gravitated towards that. And now these artificial barriers coming up, well, not artificial, I suppose these political barriers coming up, which are just testing some of that integration. So it's a big issue, and I think we've also talked about this before, Robin. If you want to understand why there's so much froth in politics around Taiwan, it's probably because of TSMC, and that's you choke off the world supply of chips, or you hold a kingpin position, So it's I think that's why the US has been so aggressive in encouraging foreign investment back in and building chips and supporting Intel and making TSMC build factories in America, is because actually you can't have all the chip factories in one country, because if something happens there, let's forget war or politics. Let's say there's a massive earthquake, and TSMC can't make chips for a year. The world just stops moving, unfortunately. So it's. I think the world's become very concentrated on a couple of key industries, Robin. Yeah.
And you thought it was only cards, poker, and chips, but it would seem much wider than that. Michael, let's just bring it back as we land to South Africa. As we sit here, I think Mr. Price gave interim results today. They weren't shoot the lights out, but they told quite a nice story, didn't they?
Yeah, Robin, everybody was so nervous. You've had all the retail companies coming out, and everybody almost without exception has been talking about gaming and the pressure on consumers' wallets, and you fighting for your share of that wallet, and you're fighting hard for it. And so, all the other, certainly apparel retailers, Truworths, Woolies, a little bit in between, but Foschini, they've come under a lot of pressure. They haven't had good results. So everybody was waiting with bated breath for Mr. Price. We've long favoured Mr. Price over Foschini and Woolworths, and we think that's where we want to be. And they came out with solid results. Revenues weren't great, Robin. Revenue growth was sort of 6 or 6.5%. But importantly, margins actually improved. They didn't have to, the big risk in retail is always that you have too much stock, it's not selling, and then you start with the sales and you dilute your margin to get rid of your stock, to make sure that you have empty shelves for the next wave of seasonal goods that come in, and it's a very, very, I think if you don't know what you're doing in retail, you're going to get carried out, because it's a very fine balance to get that right. But Mr. Price managed to improve margins. I think the market was expecting the worst. This wasn't the worst. They don't paint the consumer in a particularly good light. It's still quite tough out there. And hopefully we're recording this on a Thursday, and the Reserve Bank is going to speak in the next hour, and hopefully they're going to drop interest rates by the time we next talk to you.
Yes.
But yeah, Robin, I think things are quite tough, but well-managed companies with strong balance sheets. Mr. Price has no debt. They have a strong balance sheet. They're in a net cash position. Those companies weather the storm better than companies that are highly geared, and that's exactly why we've chosen it over others.
Yes, 100%. Well, thank you for giving us that insight. Thank you for joining us. Don't forget to like and subscribe. Enjoy the rugby, and we'll catch you next time.